Hello everyone, welcome to my channel. If this is your first time here, my name is Udoh, and every week I share content that can help you master your personal finance and grow your wealth. So if this is your first time here, thank you so much for joining me. Now, before we jump right in, I just want to have a little disclaimer. I am not a tax professional. I am not a financial advisor, even though my background is in the financial services industry, specifically with banking. So everything I share on my channel is just for entertainment purpose only, and just to share my life experiences. So now that we have that out of the way, let's jump right into today's video. I do have a little cheat sheet here, so I don't miss any point. So excuse me if I keep looking down, because I'm just trying to make sure I stay on track with this particular topic. So today's topic is on what you need to know about credit scoring. Now, there are 5 things that basically affect your credit. The way it works is there are 3 credit bureaus in the United States, major credit bureaus in the United States, and I'm sure probably where you are, that keep track of all your financial dealings. The first one is Equifax, we have TransUnion, and we have Experian. So these are the credit bureaus that keep data on all your financial dealings. So they have all your data in terms of your name, your date of birth, your social security number for those in the United States, and other vital informations, all debts that you have out there, all loans that you might have incurred, your credit card payments, and all that stuff. So they are the ones that keep track of all this data, and they sell this data to other financial institutions, and other financial institutions report your payment habits and all other data back to them. So it's this particular loop, they keep doing this back and forth. So the first thing that affects your credit score. Now, before we jump into that, the credit scoring system ranges anywhere from 300 to 850. Now, there are different versions of the credit scoring model or algorithm or software that is being used. So I'm not here trying to go through all different software updates for the credit scoring system. So the first thing you have to worry yourself with, or factor that affects your credit, is your payment history. So you want to make sure that you pay your bills on time, because if you don't pay your bills on time, your lender or your financial company that you're dealing with reports this to the credit bureaus, and that constitutes a negative thing on your credit profile. So you want to make sure that you pay your bills on time. So what number one thing that affects your credit score is your payment history. Number 2, it's the amount you owe. So how much debt do you have out there? How much do you owe in terms of car payments, your mortgage, your credit cards, your personal loans, your home equity lines of credit, anyone that you owe. Okay, this affects your credit score. So the amount you owe affects your credit score, because this also has to do with your utilization. So for instance, if you have a credit card with $1,000 limit and you use all of it up, okay, so you maxed out your credit card, now that drags down on your credit score. It impacts your credit score. However, if you only used a smaller percentage of your credit limit, that helps your credit score. Okay, number 3 is the length of credit history. So how long have you had a credit history? For some people just starting out, obviously you don't have any credit history, so in most cases you might have a low score or no score. All right, so the length of credit history determines your score. So if you've had your credit history for a long time, then you'll have a better score, all things being equal, than someone who just started building credit today. All right, number 4 is, have you applied for new credit? How much new credit do you have? So lenders and other financial institutions get nervous when they see that you're over leveraged, you have so much new credit. So which means it makes them nervous, because they're not sure if they can count on you to be able to handle all this new debt that you have. So the amount of new credit that you have on your report or on your profile also has an impact on your score. And then the final and fifth thing is the types of credit you use. So they basically look at the mix of credit that you have. So if you have a credit profile that shows some credit cards, mortgage, car payment, personal loans, students loans, all sorts of, a big mix of credit. So that shows them how well you're able to handle credit. Okay, so that's just some of the items that affects your credit scoring system. Now, how do you avoid bad credit? Because there are lots of people out there struggling right now, and I'm sure you clicked on this video, to figure out what you can do, okay, to help you in terms of, fixing your credit. So how do you avoid bad credit? One of the first things you can do is your credit profile. Most people don't look at this because your credit profile has a significant impact on how lenders view you. So the first thing you want to do is stop moving around. What I mean by stop moving around is, stop moving from one location to, to the other. This has an impact on your credit profile because it shows, your prospective lender or financial institution that you're not stable. So they like to see stability. So if you've lived in a place, more than 2 years, then it makes you look better. So to prevent or to avoid bad credit, number one, stop moving around. Number two, don't rely on loans, okay? Don't overextend yourself because this also affects your credit, okay? So don't overextend yourself. Avoid relying on loans. Number three, keep your balances low. So like I said previously, if you have a credit card with $1,000 limit, make sure you keep it, you only use 30% or lower, okay, utilization. So make sure 30% or lower is what you use, okay? Don't max out your credit cards. Number four, you want to make sure you protect your credit information to prevent identity theft, because that's one of the things that can affect your credit. If someone steals your identity and they go open different accounts without you knowing, and that can ruin your credit or affect your credit score. Now, how do you fix bad credit? Well, fixing bad credit takes patience, dedication, and time. I know there are services out there that can help you fix your credit. Some are legitimate and some are fraudulent, so you have to be careful out there. So the first thing you want to do in order to fix your credit is, number one, you want to pay your bills on time. Like I said before, your payment history is one of the biggest factors that affects your credit. So if you pay your bills on time, you're going to be fine. Number two, you want to make sure that you check your credit report periodically. So there is a site called annualcreditreport.com, and this is a free site where you can get every 12 months, okay, it is the law, you get a copy of your credit report from either of the credit bureaus. So what most people do is, every 3 months they get a credit score from one, or every 4 months, depending on how you want to do things. But for me, I just go in and once a year I just get all 3 credit reports. Unfortunately, it doesn't come with your credit score. So if you want your credit score, you'll have to pay extra to get that. The main goal of using annual credit report is just to see what's on your credit report, okay, and to see if there are errors on your credit report. Number 3, you want to keep credit card balances low. Like I said before, your utilization rate affects your score as well. Number 4, don't open or close accounts. When you open accounts, what happens is your prospective lender has to do a hard inquiry on your report. So that means they pull your credit report to see how you're managing debt. And every time they do that, it affects your score. It drops your score. So minimize how often you open new accounts. And then in terms of closing accounts, be very careful closing old accounts, because remember I told you that the length of your credit history also has an impact on your credit score. So if you're closing down old accounts that you have built up over the years, you're definitely going to see an impact on your credit score. So don't close out old accounts. You're better off maintaining a zero balance on an old account, okay, than closing it out, okay. Number 5, you want to pay off debt. So make sure that you pay off all your debt. Don't keep moving debt from one to the other, okay. Try to pay off your debt. This will also help your utilization ratio, and then it will also show that you're able to handle your debts, and then it affects your credit score. So I hope this helped you out. Like I said, I'm not a credit expert, but these are the things that I have implemented in my life, in my personal finance, to get myself out of some financial situations that I found myself in. So I hope you found this very informative, and if you do, please make sure you smash that thumbs up button so YouTube will share this with other people. And also, if you haven't subscribed yet, please make sure you hit that subscribe button, and also hit the notification bell so you'll be notified of my latest videos. So thank you so much for joining me today, and as usual, be true to yourself, be true to your goals, and never ever give up. And I'll catch you in my next video. Take care. Bye bye.